And I think that once you realize that, then you'll be able to remove a lot of that fear that could block you from making progress, because literally, like, the market is always right.
Welcome to TradeHappy. Welcome back to another Traders Podcast episode. Sit back, grab a notepad and pen and take some notes, because this is going to be a good one. Today we have a trader who's an FTMO funded trader, and he bases most of his decisions from the fundamental analysis that he does. He's also trading FTMO whilst learning law at college. Please welcome Matt Smith. So for anyone that doesn't know who you are, can you just tell us a bit about yourself?
Sure. So my name is Matt. I've been a trader now for about 4 years. I started in my junior year of college, and basically kind of self-taught through different learning systems that I came across. So, through reading, watching YouTube videos, reading different people's courses, things like that. I kind of just went through the whole gambit, and that's how I kind of taught myself. I have a background in philosophy. So in university, I studied philosophy. I studied a lot of legal philosophy as well as a little bit of business. So that's kind of how I got into the business side that introduced me to Forex in the first place. And yeah, that's pretty much it. Is there anything else that I left out?
Well, you're an FTMO trader, aren't you?
Yes.
So when did you find out about FTMO?
So it's only been about a month and a half now. So it was pretty recently. I had originally started or tried to complete the challenge and all that stuff in January, but then that's when kind of COVID happened, and there was just a lot of stuff going on, not just in the market. Obviously, the markets were a little crazy around that time, or started to be crazy around that time, but just things personally. So I kind of just took a step back from trading FTMO and just kind of doing analysis, reading, trying to understand what was going on in the broader economic scope, try to really grasp that, and also, kind of wrestle the personal issues, because I'm sure, if you're not personally in a good place, it's going to come out in the trading. So you got to always make sure that you're, in a place that you want to be, where you're happy before you're putting your attitude to the charts.
Yeah. And did you have to change your strategy at all to fit with the FTMO challenge?
Yes and no. So, like I was saying before, I've gone through different courses. Let's say they're not like formal courses or anything like that, but just different mentors, let's call them, that teach different styles of trading. And so I think up until let's say last year, December, I was familiar with a lot of different trading methods. So whether it's long-term swings or just like short scalps, I knew a bunch of different methods. And I think I was transitioning to being leaning more towards swing trading. Once I started to get a certain understanding of the economy and of markets. And then I think the rules of FTMO kind of forced me to alter that a little bit, because, you can't hold things over the weekend, things like that, the various rules. And just dealing with stuff like the swap increasing, the spread increasing at such and changeover. I don't know if you're trading at that time, but that happens a lot. Things like swap. So it did require me to change a little bit. But I think that my overall look on the market, how I'm analyzing, how I'm planning trades and things like that, are pretty much the same. I'm just getting in and out of the market more often, just because of that,
Right.
Weekend rule.
Yeah. So can you briefly describe your strategy?
Yeah. So including kind of like chart back testing or research.
Yeah. So what's your strategy for actually trading the markets?
Yeah, so before I actually decide what pairs I'm going to look at, I try to get an overview of the fundamental drivers, because I think a lot of traders miss that piece. And while I don't think you necessarily need to have a great understanding of that to be successful, I think it really helps. at least for the way that I think about the market. So I try to look for, okay, this week or this month, whatever political, economic time frame that we're in, or climate that we're in. So right now I'd be looking more like week to week instead of month to month, just because everything's very shaky. Different countries are making different decisions, sometimes quickly, sometimes drawn out. So because there's so much uncertainty, I'm going to be looking like more week to week. So for this next week, I haven't done my kind of research for the week yet, but what I'll be looking at is things like manufacturing numbers, interest rates, any like changes or any news or announcements around things like that. And then based on kind of what I see out there, I'll say, like, for example, if I see that GBP has a strong reason to continue falling, which I think it does. I haven't done my research yet, but I think it does. So I'll look at GBP, and I'll try to find within the GBP cross pairs which are the best opportunities for me to get in sells. So I'll kind of then just transition from a fundamental point of view to then looking at technicals. So I'm saying, all right, well, I already know that I'm looking for more downward movement on these pairs. So now I'll just do kind of my markups, my technical analysis, and highlight areas that would be good to enter shorts. Then, assuming I don't have, a million zones and a million horizontal lines everywhere, I'll, shorten that down to a couple key areas. And then I'll just kind of wait, and I'll see what happens when price gets to those different areas, and I'll decide to take my trade on whatever day or whatever time it gets there.
So what do you use to actually get those fundamentals? Is it just like a free website, or do you pay for something?
Yeah, so nothing is paid for. I do pay for a sort of group that I'm in, and there's some news that guy sends simply because he does market research for an actual institute, so he shares some like a particular point of view that he has just based on experience. So I do pay for that, but the other websites that I use are all free. So I use something called FinViz, FINVIZ. And that just gives me an idea of, I need this ads start popping up. So I use that for an idea of the indexes. So like dollar index, euro index, GBP index, stuff like that. And that will be like just one confluence, let's say, for how I'm determining my bias for the pairs. So I'll just kind of look at that and see what forecasts are, see what the different types of traders in the market are doing. I also use trading economics, market economics. So those are the main websites that I use. And then outside of that, it's just kind of research on news that's out there. So I'll read The Economist. I think The Economist is pretty good for kind of high level views of where things are heading. The Economist, I think, has a very nice, fairly unbiased way of presenting what's going on. So I think it makes it a lot better to make an unbiased decision yourself, because we got to remember that we need to be unbiased in the market. So I'll read that, and then, I'll get an idea of like, oh, China's doing this, Japan's doing this, US is doing this, whatever. And then I'll go like on local websites. So websites that are local to whatever country. So whether it's like Business Insider or Bloomberg, and then going on Reddit and trying to find articles from different countries. I'll do that too. Just anything that I can kind of get my hands on that I know is not going to be, or that is trustworthy information, basically.
Right, yeah. So you mentioned that you combine the fundamentals with the technicals.
Right.
Do you use like any indicators for your technicals, or what kind of things are you looking for?
I mean, honestly, not really. The most I'll use is moving averages. And that's only for like entries within my key levels. I don't even like use the moving averages on higher time frames, like daily or weekly. So I'll do my analysis, just regular analysis based on weekly, daily, 4-hour. Mm-hmm. And then assuming price gets to somewhere that's interesting to me, maybe I'll go down and I'll just use my EMAs and try to see if that can give me some precision. But honestly, like even sometimes with that, I don't use that. Like, if you've been trading for a decent amount of time and you have a pattern that you look for, or whatever you want to call it, just something that you notice, whether it's a time of the week or time of the day that you always enter, or a specific candle pattern, like whatever it is, like after you're doing it so many times, you kind of know what you want. So certain things just look good to you. So I try not to rely on indicators as much.
And do you think that traders need to put in that time to the charts to learn those things and those patterns?
It's a good question. Honestly, I think it depends on what type of trader you want to be. Because if you're going to be a trader that's holding things for a week or for a month, or I shouldn't say a week, maybe 2-3 weeks or multiple months, you don't necessarily need to know like analysis super well. You can get away with some pretty basic support and resistance. Now you might need to use a really wide stop loss or no stop loss. But let's say that you're just basing things off of fundamentals or just basing things off of interest rates. That's a strategy that you know works for you over a longer time frame. You don't necessarily need to put in time to learn chart work, to learn precision with like candles, any theory of price action. But it's like an art on its own almost. I guess I could make an analogy like you could be a doctor, but you don't necessarily need to specialize in the art of surgery, right? Like you can be a doctor for other things and have a good idea of fitness and the human body and things like that, but you don't necessarily need to be really great at surgery to be a good doctor. So no, I wouldn't say it's always like really necessary. It just depends on what you're trying to do in the market.
Right, okay, yeah. That makes sense. So during your FTMO challenge, is there anything that stood out to you that you were doing well?
Honestly, I would say that it helps to go for a lot in a little bit of time, if that makes sense. So if you know that like it's really good to capitalize on a big move. Like if you're unsure about something or it's not quite exactly what you want, it doesn't quite exactly meet your requirements, and let's say you lower your risk a little bit, that's fine, right? Because you don't feel comfortable, whatever. So I would say that I did a really good job of, when I was feeling comfortable and confident in the setup, to just kind of go for it and not shy away from like a typical risk size or even adding more risk, simply because I knew that there was like kind of something else on the line other than money, if that makes sense. And I think that was really helpful, because if you get, let's say, a $4,000 or $5,000 day, I mean, that's half of your challenge right there, and then it sets you up in such a good position for the rest of it, because now you can lower your risk size no matter what and be kind of a little bit more conservative, and you'll probably still be okay, assuming you're still making equally good decisions. So I feel like not being afraid, just because of the fact that it has like this challenge aspect to it. So there's like an additional component of failure. Like usually when you're trading, it's either you win or you lose the trade. But now it's like, oh, either I win or I lose the trade, and I could lose the challenge. So I feel like if you kind of just separate from that and stick to your normal pattern of trading or your normal routine, it makes it a lot better, because that's kind of the goal after all, right? Is to get more familiar with things that make you uncomfortable and make them more comfortable. So
so do you think that someone that might be losing on a smaller account, once they actually go to FTMO, do you think that they could possibly be profitable because they have that larger account?
If they're losing on a smaller account and then they have a bigger account? Maybe. It depends on what the reason is that they're losing, right? If they're losing because they set a 20 pip stop loss and they just get knocked out of the market or the move every time and then it goes their way, yeah, maybe more capital would help, because it would allow them to use a small lot size and widen the stop loss to somewhere that makes more sense or gives them more room to work with and can allow them to stay in the trade. So like, yeah, that's definitely something that could be fixed by having a larger amount of capital. I would also say that having a larger amount of capital gives you more confidence, and confidence is such an important part of trading. But it also opens up the avenue for bigger losses too. So that is definitely one thing to be wary of. But yeah, like I said, I think it just depends on what the mistakes are. Like if you're, for example, someone who's losing consistently because you're just over leveraging or failing to take profit, or I don't know, just doing kind of ridiculous things in the market. Um, I don't think that's because you're working with a little amount of money. I think it's because you don't know what you're doing, or there's something else that's affecting you that's spilling over into your trading, or there's something else there. So I think that in most cases, if you're making like bad decisions with a small amount of money, it's not going to be any better with more amount of money. So yeah, that's what I'll say on that.
Yeah. Do you have any advice for traders looking to do FTMO from your experience?
Yeah, I would say don't rush. There's like really no rush at all. Like I would say the biggest mistake that people make is that, I don't know, maybe they only have a year of trading or 2 years of trading, and they think that they have like a good understanding of technicals or fundamentals or just their strategy, whatever the case is. And so they're like, yeah, I've been doing fairly good. So maybe if I go for this big amount of money, it'll make a big difference and things like that. But I think you gotta always give things a little bit of time, because I think over time you realize that like the fear of missing out, or FOMO, that kind of goes away the longer you trade, because you realize that even if you miss the 400 pip move candle, like 1 hour candle today, like there's gonna be another day where not necessarily that happens, but there's gonna be another day where there's a big move that you're gonna catch. Like, and I think that's a really big hurdle to get over in trading, because I think a lot of times, even in my own experience, I used to do this a lot early on. I would maybe get in a trade, it would go, let's say 100 pips. I'd be very happy with that, and I close, and then I would be really upset when I see it continue for 200-300 more pips. And then maybe the next time I try to go and hold that 100 pip trade with maybe a generous stop loss and profit, and I try to go for that extra 200 or 300, and then it just doesn't work out when I do it. But then every time I, take profit, it seems to go the opposite way. I think like that could be a very limiting, like cycle of a mindset to get stuck in, if that makes sense.
Mm-hmm.
It's just gonna have you conflicted with yourself. So
Yeah,
I think the time is like a really important factor in terms of learning lessons like that, and others. I think that was maybe more personal to me, but I think that lesson in others is something that you only get with time. So I would say don't rush. Like if you're winning like every trade that you take for 2 months, like I would still say give it some time, and like try to make yourself go through more ups and downs, because I feel like if you're able to go through those ups and downs and like I guess observe your emotions and figure out how to handle them, then if, let's say, your drawdown is -30 and you had such and such emotion and you were able to battle it and win, and maybe you took the loss and you grew from it and you rebuilt the account, or maybe you just held the drawdown and it ended up going your way, like whatever you learned from it, when the case is you're in 30,000 drawdown or 3 million drawdown, it will be kind of the same. You'll just be like, oh, it's extra zeros. It's not, like I've been here before. I've been in this predicament where I've been down X percentage or whatever, and it felt really bad, but I know how to react in the situation. So I just feel like the more things you expose yourself to in the market, the better a trader you'll be over time.
Yeah. And do you think that traders need to trade an actual live account before doing FTMO, or do you think they could go straight from a demo to a live account?
I don't know. I think that's just gonna be like person to person. It's such an individual thing. I mean, I think it goes back again to like your ability to manage the emotions. If having a real account is gonna change your emotions a lot, when you make the transition, then yeah, it's definitely gonna be hard. I mean, but if you're gonna make it work, you got to get over it. So it's hard to make it feel like it's a real account when you know it isn't. But I mean, I think it's doable. I mean, anything's doable. I think as long as you kind of make up your mind about what you want to do with your trading and you kind of stick to that, I think that that is a key because, like I was saying before, you don't want to be in a situation where you're internally like battling with yourself because of past experience or past trade or whatever the case is that's making you feel that way, because it kind of just makes like there's so much uncertainty in Forex that the last thing that you want to add to that pile of uncertainty is your own individual uncertainty. You know what I mean?
Yeah, yeah.
So yeah.
So during your FTMO challenge, was there one trade that stood out to you in a good or bad reason?
Good or a bad trade? Yeah, I think definitely. Let's see, what was this? I think it was in February or March. I had a trade on Euro JPY that essentially won the challenge for me. It was really it was a weird trade for me because so it was a trade where basically I caught the initial move, there's a pullback, and then I added more to the pullback. And the second move off of that initial impulse was like 280 pips like by the next day when I woke up. And the re-entry that I added, so normally I would just go in with like a standard, maybe like 1.5 or 2, but for whatever reason I just went in with 5 lots. And I really don't, I like it was kind of silly, honestly, thinking back, but I'm glad I did it, of course. But yeah, I guess that was one that stuck out to me because I achieved my goal. I didn't really have to do anything spectacular, and I think it was one of those moments of, I don't want to call it clarity, but just like no, there's no fear in like me using such a high lot size. I was just kind of so confident. I was like, I've seen this move before. Fundamentals make sense. Like everything makes sense. And I was just like, if I lose the trade, I lose the trade, whatever. But there's a strong potential I'm not going to lose it. So I kind of just went for the extra lots, and it ended up paying off. So yeah.
So how long did it take you to develop your strategy and actually be consistently profitable with it?
Oh man, I think it took well over a year and a half, 2 years. Because I think that I think there's like kind of tiers within trading.
Mm-hmm.
And I think that once you get to like the top of one tier, right before you're going to get to the next tier, there's something weird that happens right before you get, like, let's say that last puzzle piece that fits together that allows you to jump to the next tier. There's something weird that happens there. But I think that once you get it, it's really helpful in your shift to understanding a higher level of trading, a higher level of functioning. And I think that is something that you need to chase. So in other words, never being like complacent with where you're at in trading. I think there's always, always, always more to learn, even if it's more to learn about the same thing that you've been doing over time. Because even though you have one strategy, someone else can use that same strategy and look for even different subtleties within it. So, I mean, it really took a while of soul searching, I think, as well, because you also, like, your trading method, your trading approach has to also fit who you are. Like, if you're someone who doesn't like to micromanage things, you can't be a scalper, because what's the biggest thing that you have to do as a scalper? You have to manage your stop loss. Oh, there goes another 30 candle or another hour candle. Move my stop loss or add a position or hedge the other, like whatever it is. Like, you're always going to have to be doing a micromanaging task in some way. So I feel like your trading style has to agree with like who you are as a person, or I guess how you like to work would probably be a better way of saying it. So I think that the reason it took so long wasn't because of any difficulty with learning Forex itself. I think it was more the difficulty of also figuring out what it was that I like to do. everyone figures that out at a different point in their life, whether it's when you're 20 or when you're 35. Like everyone does it at a different point. So I think that is equally as important of a factor to figure out as it is to figure out how you want to trade, right? So I think that's part of the reason why for most people it takes upwards of 2 years, 3 years to become really proficient. And I feel like maybe any task really. I mean, yeah, Forex is different,
Yep.
but different and difficult in its own way. But I think like really any task is that you have to figure out how you fit in to the domain of the task and how you're going to kind of use your best self to get the best results out of what it is you're working with.
Yeah. And so was it a difficult process for you actually to become a profitable trader?
Yeah, I would say it was difficult. Yeah. I mean, listen, I think that Forex is it's a great thing. It gives you freedom. It allows you to capitalize on your knowledge. It opens up a lot of different opportunities.
Mm-hmm.
But it's honestly, for some people, just simply not the best way to make money, right? Like it's kind of the only job where you get punished monetarily for making mistakes. And for some people, that's really detrimental. Like imagine, again, back to like that analogy, like imagine a doctor who like every time they made a mistake in surgery, they like got fined an amount of money or like got charged some conduct points or some ridiculous thing like that.
Yeah.
It might make people like really weary of becoming doctors because like, you know, they get treated badly or they always have to pay when they make mistakes or something like that. So like honestly, it's not it's not the best way when you think about it on that type of scale of making money. Like it's not really a surefire way of making money. It has a lot of stress. There's uncertainty. There's things that could happen that really mess you up. Like for example, if in our current climate, you know, if Trump makes a weird tweet like that could inflate the market or deflate the market a sizable amount. But like if you're just like working in a restaurant, no one's gonna hopefully like come by and like throw a grenade in there, you know, like they're not gonna just like make it really difficult for you all of a sudden to run your business. So
Yeah.
for a lot of people, it's not the best way of making money, and it definitely is a difficult way of making money. So I feel like you have to be committed more to the other benefits of it outside of getting the money to, you know, even have the courage to continue doing it, because it's not a safe occupation, if that makes sense. Like, you know, like every day you have to show up.
Yeah.
It's kind of like being like a professional athlete in, you know, in soccer and football, like whatever. When you're performing in like a tournament or at the highest level, you are always going to have people that are kind of rooting for you to fail or trying to take your number one status, right? So you have to like show up every single day and like be the best like that you could be, but also make sure that the best that you could be is better than everyone else. And that's like a really hard thing. Like there's really not too many jobs or professions that you have to do something quite as stressful. So yeah, I definitely said it. I would think I would describe it as difficult because of, you know, the different things that you got to grapple with, the different factors, and it really, you have to really take control of it, right? No one's gonna, you don't have a boss, you don't have a company or anything like that to shape your decision or your thinking. It's really kind of all up to you. And for some people that is like really uncomfortable and like not the best way of making money. So yeah, I would definitely say it was difficult.
Yeah, 100%. So when you were starting that journey of becoming a trader, was there anyone inside or outside of trading that you looked up to?
Inside and outside of trading. Let's see. I mean, yeah, yeah, definitely. There's different people in. So the reason I'm struggling so much to answer the question is because I feel like every domain has a certain type of personality that you could recognize. and it's like very similar. Like it's someone who's like kind of been an all-star. They're like well respected. Um, Sometimes they might have let's say controversial statements or something like that, but you could tell that they're always trying to be honest and trying to get at the root of an issue, or they're really just not trying to bullshit people,
Mm-hmm.
if that makes sense. And I feel
Yeah.
like you see that everywhere. Like you see it in sports, you see it in banking, you see it in law, you see it in medicine, right? You see it kind of everywhere. And I think that instead of like naming one particular person or group of people, I feel like I look for those personalities within the domains that I'm interested in.
Right.
And I try to just like see what it is that they're doing, right? Because a lot of the time, like, there's a reason why people become famous, why people become popular, why people achieve the success that they do. And so I feel like it's important to pay attention to them if that's where you're trying to be in your respective field, because they all have some, like, of course, they don't have the same experiences or like the same upbringing or the same level of education, whatever. Like there's tons of different qualities throughout all those different people. But I think that you can narrow down certain ones that they all have, whether it's work ethic or routine or like anything like that. I feel like those are things that I like look out for and I try to emulate. Um, so I feel like, so when I'm doing research about like banking in the US at least, and it names like different bankers or different institutions, I'll like look up those institutions and try to read more about, you know, how that person got there, how that institution grew so much or whatever. And you'll find that some of them were really sneaky and like maybe they used private equity to like a really weird advantage to like gain their wealth. That might not be someone that I personally want to emulate. I'm not saying there's anything wrong like with that. I'm just saying that like that's not how I'm trying to do things.
Mm.
So like I'll be aware of that and I'll be like, all right, maybe I don't want to pay attention to this person as much, or when I do pay attention to them, I keep in mind what they did to get that money or to get that respect or something like that. So I feel like instead of like looking up to someone, I kind of evaluate people based on what it is they stand for and how they got there. And I try to like use that as like, I'll use the word confluence again, you know, how, like what to take from them.
Yeah.
You know what I'm saying? So like,
Yeah.
back to that example of if I know that like I'm trying to be a really good banker or like a really good like financial advice, like whatever it is, and I look at one banker and he like was really sneaky, he like broke a lot of laws or like used a lot of gray area laws and like sneaky back channels to like get his wealth. Like while I might respect him for his like economic view because he understands clearly how the economic like wheel functions, I might not respect as much like what he says about like moral business like ethics. You know what I mean?
Mm.
So like I'll use kind of who they are as a person to see like what it is about what they're saying that might have more value or like less value, if that makes sense. I know that was kind of a
Yeah.
long answer.
Yeah. It's like
So
you're peeking behind the curtain, aren't you?
yeah. I never take anyone just at like their face value
Mm.
of what they're saying, because as we've seen, especially I think this year, that's a very dangerous thing to do. You always got to, so to speak, follow the money and figure out like what's kind of going on behind the scenes.
Yeah. Yeah. I like that answer
Yeah.
there. So what do you see in winning traders that you don't see in losing traders?
But I don't see losing traders. So I don't see winning traders panicking. I don't see them taking a lot of trades. Excuse me. At least the ones that I know,
Mm-hmm.
and the ones that like I've come across in my learning experience. I see winning traders are very calm. They're always taking the same types of trades. They don't have 7 setups that they're looking for in the market. Because like, how do you even keep track of that? There's 20 something odd pairs or 30 something odd pairs. Like, how are you going to have 8 different trading setups that you could trade and then also 30 pairs or whatever it is, and then like try to figure out the best one. Like you're gonna be running in circles trying to figure it out. So I feel like there's a underlying method, and there's also a drive that doesn't stop. So they keep going, and they don't stop until they figure out what it is they need to get right. And once they get it right, they continue to do that. And I feel like the other aspect is being calm and not having the stress, because the time is going to pass anyway. The wins and the losses are going to pass anyway. So, you know, you might as well try to remove that stress piece and be as like free flowing as possible. I think a lot of losing traders, they try to ask why instead of understanding why, or trying to like see where they are wrong. They try to like maybe put their ego into the market and say, well, like, oh, this always happens to me, or I don't know. You know, I think just good traders are calm. They don't rush into anything. There's no point to rush into anything. And I think that goes back to what I was saying before, that only comes with a certain level of experience and time in the market, right? If you're a new trader, it's so easy for you to get frustrated because you might take 2 trades on Monday and 2 trades on Tuesday, and you lose all 4 of them. And then next thing you know, the same trades that you took, if you had kept your stop loss and didn't close the trade early, like on Thursday, they went into profit, and like, you would have been up a good percentage or something like that. And those might be, you know, small little things that people get really upset at, new traders and experienced traders, losing traders, where an easy fix is just patience and waiting. I think a lot of like prominent investors have said, like, you make more money when you just sit on your hands, when you just wait on that, you know, one key setup or that one thing that you know will play out. Like if GBP announces more really bad Brexit news, like why would I be trying to like look every hour of every day to try to find a buy on GBP? Like, no, let me just wait for like the induction move or the false move or whatever it is that I'm looking for, and then just go pretty hard in on the sell because it makes more sense. You know, like sometimes the trade that you see playing out day to day right before you that you're missing out on isn't the real move. And so like losing traders might get so caught up on like, oh, I should have been in the buy, or I should have been in the sell. Like I knew I should have done that. Like why didn't I? You know, instead of doing that, like maybe focus on what the bigger picture is, because you might reveal that you're actually in a better place because you didn't trade. I think also winning traders have how would I describe it? Like an intuition, maybe, if that makes sense, where like even though they have like a specific set of rules and whatever that they go with, I feel like they know when to break them, if that makes sense. So like something might not meet all your criteria, but you're like, oh, it still looks good, but you can't really say why. But it kind of just does. Do you know, does that make sense? Like, have you ever experienced that? Yeah. So I feel like there's a little bit of that too in winning traders, and I think that's something that comes with experience too. It's like you know, if you're doing like any sport, and you see someone do like some crazy play, whatever it is, typically it's because they've done it like a lot, just like messing around in practice or you know, something like that, and they were in the game situation, they kind of just didn't think about it, and they're like, oh, it seemed good, it felt right, and so they just did it, and they end up with like this like all-star play or whatever. I think it's something a little bit like that.
Yeah. And what would you say makes you profitable?
What makes me profitable? That's really a difficult question, honestly. I would say not taking wins or losses to heart is a big reason. So what I mean by that is if I place a trade on, all right, so I did my, you know, weekly analysis, whatever. I have my zone set up. Monday comes along, I take a trade, I win 3,000. Tuesday comes along, I take another trade, I win 3,000. Wednesday comes along, I take another trade, I lose 2.5. Um, I didn't I didn't do anything differently across those days that made me win or lose. And I think that's an important thing for people to realize. Like,
Yeah.
you can't force anything to happen. All you can do is react. And so if something goes your way, you aren't any better because of it, and you didn't do anything better to make it go your way. If something does not go your way, you're not any worse for it, and you didn't do anything specifically for it to not go your way. Like, regardless of you entering that trade, whatever happened still would have happened. And I think it's important for people to realize that. And I think that once you realize that, then you'll be able to remove a lot of that fear that could block you from making progress. Because literally, like, the market is always right. Like, you can never be right and the market wrong. You know what I mean? Like,
Yeah.
that it just doesn't make sense. You can't say, well, oh, this doesn't make sense. Like, if the news was this, it should have done XYZ or whatever. Like, yeah, you can say that and you can not understand why, but it doesn't mean the market's wrong. Like, the market is always doing what it's supposed to in search of equilibrium.
Yeah. Yeah. So what advice would you give to someone who maybe struggles with discipline or patience when actually trading their plan?
Um, hmm. I would say, in a case like that, examine your habits, maybe, and
Mm-hmm.
examine what things you do throughout the day. And if there's things that put you in a frustrating, and like an aggravated state, figure out how to fix it before you trade. And so what I mean is, like, you don't have to never be in that aggravated state ever again your entire life. You just want to make sure you're not in that state while you're trading. So you need to figure out, like, what it is, and figure out how you can fix it. So maybe there's something within the issue that if you just resolve that issue, then you can continue that activity and it just won't put you in an aggravated state. That might be one option. Another option might be that no matter what you do, that activity is always going to bring you aggravation and you can't stop that activity for whatever reason. That's fine. But now you have to make sure that you have some routine that you do before you approach the charts that gets you out of that state and into one that's going to, like, be better for trading. Um, so whether it's like finding a song that puts you in a good mood and just listen to that song like a couple times, or an album, or maybe you need to go for a run or do some exercise, stretch out. Maybe you meditate. Maybe you look at yourself in the mirror and, like, talk to yourself and say, like, whatever. Like, it could literally be anything. Maybe you play video games and that calms you down a little bit. Like, find something to do that gets you out of a state that's not, you know, favorable to your trading, and get into one that is going to be a little more calm, a little more zen, so to speak. And I feel like that will help. And if it doesn't help your trading, maybe it helps you understand that trading is not going to be right for you. Because I think that's another factor too. If you're constantly frustrated and you're trying really hard not to be frustrated, maybe, and like you still can't solve it, it could be that trading is not for you, and there's really nothing wrong with that.
Hmm.
Or it could just be that Forex isn't right for you. There's other ways of trading, investing your money that could remedy those situations, right? Like, it could be just that the very nature of how Forex is just doesn't agree with you. Cool, go trade stocks or go trade futures. Like, there's other stuff that you could trade, or just invest in companies, like become like an actual, like, IPO investor or something like that. Like, there's other things that you can do to still grow your money or have your money work for you. I mean, you can do e-commerce. There's millions of things you can do
Yeah.
to make money. So I feel like, if a lot of times, if you're looking at it from the perspective of just making money, that might bear its own frustration, because, as we were talking about before, it's not the best way of making money. It's not a very secure and solid way of guaranteeing money every single day. Like, some days you'll have it, some days you don't. So yeah, I feel like that, just, figure out a routine or just something to get you in a better mood. And I think that will probably improve your trading.
Yeah. So what does your average day look like? Do you have any routines that you do?
Yeah, so I do yoga every morning.
Mm-hmm.
So that's my way of being like fairly calm and like relaxed and like kind of awake. I think you feel very awake and attentive when you stretch out. And it doesn't necessarily have to be like a full yoga uh, like routine of progressions. Like you can maybe just like do a couple push-ups, maybe some jumping jacks, and like stretch your legs and stuff. That might be enough for you. That's cool. Like whatever works for you. But yeah, that's what I do. I do yoga, and then I read for a little bit, similar to how I was reading before we started here. So I'll do like some economist reading or just some general news, like see what's up in the world while I like drink coffee or whatever. And then I'll look at the charts, see, what looks good. If I see like a very sharp aggressive move and there's a lot of volatility in the market, I'll probably just stay away or maybe check back in a few hours and see like what the 4 hour candles did and see if they created any opportunities or if it was a fake out or something like that. But generally, I'll stay away from that. If I see a lot of consolidation, then usually for me that's a good move, or presents a good opportunity one way or the other. And then once I'm like either, I shouldn't say done trading for the day because I don't always just day trade. Like sometimes I do intraday. So if I'm in the trades that I want to be in for the day, I'll just call it a day, and I'll check the charts, every now and then if I'm
Mm-hmm.
not doing anything. But I'll go make food. I'll study. Like I said, I was studying for school. I'll study a bit, or I'll just read, play video games, like do stuff that normal people do. Like I'm not just on the charts 24/7.
Yeah.
Nor do I think that's particularly healthy, honestly, to the eyes and stuff.
Yeah.
So yeah, well, I feel like I just kind of get up, get moving, get my coffee, read a little bit, attack the charts, and then once I've had a successful day, or once I've finished my day, I'll try to study or some form of that, or maybe do a second workout. But I think that's it. I don't have like too strict of a routine,
Yeah.
because I don't want to get like, I feel like personally with having too strict a routine, if you miss something or like start it late and you're too strict about it, it can sometimes like ruin the purpose of it. Like the purpose of it is not to like be on time and start like a class. The purpose of it is to like feel good and like get the benefit of the activity. So
Yeah.
I try to like do the same things, but not necessarily the same time every day.
Right. Okay. Yeah, that makes sense.
Yeah.
Well, I appreciate you coming onto the podcast today. Is there anything else that you'd like to say? And also, where can people find you?
Oh, where can people find me? I mean, I don't have like I have a social media, but I don't like put trades on it or anything like that.
Mm-hmm.
So I guess like Telegram would be best for trading stuff, because like no one's really gonna be able to like see my Instagram and know I'm a trader or anything.
Mm-hmm.
My Telegram is it's pips all day, one word, PIPSALLDAY. If anyone wants to like chat or like.
Okay. I'll put it in the description below.
Okay, cool. Yeah, and you can tag my Discord there as well. I guess it's just Mr. Smith and then the numbers. So I guess you could just tag that too. But I mean, I guess the last thing I'll say is just never give up. If you're really committed to becoming a trader and you really want to understand the economy and everything like that, everything you say and everything you say you believe, just go with it. Because the only way you're gonna definitely fail is by not trying. So like if you want to do it, go for it. I mean, anyone who's been persistent about it, I think has made it. And maybe you won't be able to make a living off of it. Maybe you won't be able to be a 10 grand a month trader, but that's cool. Like you can just be a 500 a month trader. Like if your goal is just to kind of get some enjoyment out of it and find another way to make your money work for you, go for it. I can't stress enough how important it is to understand how the economy works and how banks use your money, how investors use your money. Because if they're using that to make great fortunes for themselves, there's no reason why you can't do the same. So if it is something that you're really passionate about and that you want to do and you think you can take control of, just the one advice is always keep educating yourself, so always keep reading and just never give up. And I think that's a good place to be in.